How are we sounding now? Better? Okay, I think that might have solved it. There's this delay with YouTube, so uh, I'll just assume you can hear me now. Actually, there's a pretty massive delay. Huh. Okay, great. Thank you guys. Thank you. I didn't realize that the delay was so huge. I thought it was only a couple of seconds, but it seems like it's more like 30 seconds to a minute. So I'm gonna have to get used to that. If I ask you guys questions or if you guys type into me, just know that I'm not seeing it in real time. I'm seeing it a while later. So I apologize if it takes me a while to respond to you. So we are looking at the VIX environment, and this is the lowest level that we've been since February. So it's been quite some time. The concern is that if we do get down close to that 15 level, I don't see any reason why this market should get below 15. And we're in the territory now where it looks like we could start heading back upwards, start maybe spend a couple of days at least, or one day at least above 20. And that would be in line with that pullback that I keep on anticipating. My colleagues keep on anticipating. There's just, this drift higher with the SPY is just, it's taken a long time. It's unusual, and it is good that we keep making all-time highs. That shows the bullishness in the markets, but again, it's not really that sustainable, and it makes it really difficult to go into positions. Now we chose some positions that probably looked pretty good yesterday, and we're probably going to come up to the same conclusion today unless something shifted. So in this chop sideways on the SPY or slow drift upwards on the SPY, what we're trying to see is sometimes sectors rotate on us, and it's invisible to on the overall SPY. But if you break it down to that sector level, you can see that money really is shifting. Okay. So hi, Tim. Hi, Tim. It's great to see you. Nathan, great to see you. Barry, John, Omar. All right. So you need a pullback. Yes, we are in need of a pullback. That is correct. So let's take a look at the VVIX and see if VVIX is giving us anything. VVIX is down a little bit of a green bar, right? But it's still down. So VVIX isn't really giving us any more additional information than we got from VIX. And then I want to see signs did anything shift in terms of, well, first let's take a quick look at TLT. TLT moved up a tiny bit, just normal level gold, oil. Yeah, not a lot of movement in anything so far. Bitcoin. Okay, Bitcoin moving up. And so we may see some downward movement in the Bitcoin SPY. Let's go SPY, gold, silver. Gold, silver, mostly flat. SPY, gold, flat. SPY, TLT, flat. So very, very flat markets overall. SPY, BTC, USD. And yeah, so this is where we're seeing a little bit of movement. Overall, not a huge amount, but if this develops into a trend, then we'll want to watch that. So SPY is up and Bitcoin is up, but Bitcoin is up even more. So that's why you saw that move downwards. So BTC USD, we may take a look at some Bitcoin stocks. That's a breakout right there above this high over here, and above this high over here. And I believe that's an all-time high. So looks like Bitcoin could move a bit faster than S&P even if it continues to move upwards. If there is a pullback in the SPY, it doesn't necessarily mean that Bitcoin has to pull back. We keep cycling between periods of high correlation in Bitcoin and lower correlation. So we may not necessarily stay highly correlated. Let's take a look at the correlation right now, SPY. And I'm just going to add Bitcoin right here. Okay. So we really want to look at shape and relative. So here, this went way up. Well, that's just kind of sort of went up. This went sideways. This went in a huge range sideways. So we just want to see the overall shape of everything. And they are pretty highly correlated right now. It's just a much more volatility in Bitcoin, which is to be expected. We still have a lot of volatility in Bitcoin. It's just, it's becoming more mature. So we're not seeing as much volatility. So let me get rid of that Bitcoin again. And if you saw me speaking last week, you may have heard me talk about Bitcoin Treasury stocks. So right now, Wall Street is starting to shift more into Bitcoin Treasury stocks because there's a limited amount that they can do with Bitcoin directly. So if they want to get exposure to Bitcoin, they will likely go into Bitcoin Treasury stocks. So these are our micro strategies: Mara, RIOT, Galaxy, CLSK, Coin. So let's take a look at a few of those. We've got MicroStrategy. It's looking pretty good. It just has to break out above these highs. We're challenging them at the moment. But this is, again, what I was talking about the last couple of days is if I use the MA50 as my longer term trend, then I can use an EMA8 or EMA20 or price itself as a short-term trend. And it didn't matter in this particular case which one we used. All three of them gave us the same thing: a pullback against the main trend, and then a reversion back upwards. So about a week ago was a great entry point for MSTR. And for me, if what I would have looked for was this red bar crossing down below and then the green bar after it right here. So that would have been an ideal entry right there. Okay. So the last week this has been moving upwards. This is still very early in the trend, but since we didn't catch that bounce, then what we want to do is wait for that breakup above these highs right here before we went into something like MSTR. Let's take a look at Marathon. Similar. We did break out above that MA200, pull back test, and then bounce up, breaking above these highs. Yesterday was a great entry. Today's still early. So tomorrow may be a good time for Mara. Let me just, MARA. Let me write that down for myself. And then let's take a look at RIOT. RIOT was better back here, but it was also a pullback. Where's my path? So break above. I need a different color. How do I change the color? Well, I guess I'll draw it. Pull back to the MA200, back up, pull back to the EMA8 and up. So let me see if I can change that color. There we go. Okay, so a couple days ago, again, was great entry into RIOT. So it looks like a couple days ago was the proper entry for a lot of these Bitcoin Treasury stocks. So as a sector, as a whole, a couple of days ago was really when money started to shift into this sector. Let's look at Galaxy, GLXY. Not nearly as strong as the others, but this actually it's lagging, but it could be very, very soon. Because if I look at that EMA8 or that EMA20, then what we're seeing is matching trend against the trend, reversion into sideways, so not quite matching the trend yet. And then over here, now that we've touched the longer term trend line, either this is going to continue through, in which case we won't be interested anymore, or this is going to bounce upwards and then start matching the current trend, in which case we will be interested because that would be a perfect short-term entry. So I'm going to put Galaxy on my watch list also. And then Coinbase and Block are probably as far down as I would go in terms of this list of stocks over here on BitcoinTreasuries.net. Tesla is not really a Bitcoin treasury stock. I think it's on here only because they hold a lot of Bitcoin. And then maybe Hut 8. I've never heard of them, but I could take a look at them. Hut Coin XYZ. Yeah, yesterday to today would be a shorter term, right? This was a price reverting to match the EMA 8 or EMA 20 or MA 50. So that's a good entry over there. If I was just looking purely at the moving averages, then the actual better entry would have been over here, right there. Okay. And then we've got coin. I'll note Hut just in case. Coin took off. All right, so this was the pullback, the short term. So price pull back into the EMA 8 and then bounce to match the EMA 20 or the MA 50. If you're just looking at the moving averages, then sideways until we had this very strong bar right here. That was the takeoff point where the short-term trends matched the longer-term trends. So if you're using the moving averages, you would have done it right here, right? And this is still a pullback opportunity over here. This is already broken out and gone up. So this becomes a little bit less probability, but this is very, very strong. I wouldn't chase into coin given that we have Marathon, Galaxy, and Hut that are setting up for potential moves. But the coin is demonstrating exactly what we're talking about. You can see how, in this case, it went parabolic. Okay. And then XYZ. XYZ, I wouldn't touch yet. There's too much overhead resistance. So it'd have to break above that MA 200 and pull back, similar to what we saw with, was it Marathon? Yeah, broke above the MA 200, pull back to it, and then bounce upwards. So XYZ can go on a watch list, but not a watch list for tomorrow. Okay. And so we jumped the gun a little bit. We didn't really look at our market breadth, but it's only because we, in the course of discovering that Bitcoin was leading the S&P 500 and could help us diversify a little bit away from a potential pullback in the S&P 500. That's why we started looking at those Bitcoin treasury stocks. So let's take a look at that breadth. It looks same as yesterday. Actually, probably a little bit more in terms of the MA 200 continued moving higher. MA 50, not so much, just kind of chopping sideways. So again, we're just waiting for a potential mean reversion back downwards on the shorter term. So because these are far enough apart, we're not really concerned about this dragging down below the MA 200 or pulling the MA 200 averages down as well. Okay, so now I'll take a look at the sectors and see if I see any sectors that I'm interested in other than the ones that I saw yesterday, which were XLB and XLU. And I just covered all your comments. So let's see what, any thoughts on Ethereum? Right now at this moment in time, I'm far more interested in Bitcoin treasury stocks rather than specific coins themselves. And I saw this is just showing me everything that the Bitcoin treasury stocks are showing me. Same behavior, right? So a chop sideways and then move upward, a test of breakout, retest of that MA200 and then move upwards. The major difference here though is I'm seeing a flat MA50, and then those moving averages are starting to move upwards. So what the more likely effect over here in Ethereum is, if this keeps on going up, like we don't get stopped out by this overhead resistance right here, because this is resistance. Okay, resistance right there, resistance right here. There's an area of supply. So this might just bounce back down. But what I would look for is that MA50 starting to move upwards, in which case the shorter term ones dragged up the longer term. That's not our best entry. Right? So if that MA50 continues to go upwards, and then we see those short-term trends or the price pull back downwards, then bounce, that would be a higher probability entry. So for me personally, in this current environment, it's too early to go into something like Ethereum. If we started to see a lot of volatility in the S&P 500, that VIX starts spiking up to 20 something, and we see money pouring into Ethereum and Bitcoin, why would that happen? It would be a flight to, in this case, we wouldn't necessarily call it quality, but we could say a flight to potential safety. Then that's a different story, right? Now we're in a different VIX environment and we're looking at different things, and then we could trade a breakout. Okay, so right now Ethereum is not interesting to me unless it breaks out, it pulls back. That MA50 is already curling upwards, and then the shorter trend or price pulls back down and then bounces. Okay, and so let's take a quick look at the sectors. And I doubt I'm going to see anything different than yesterday. XLF. Okay, we'll take a quick look at XLF. We'll take a quick look at Dow, retail, and I'll look at XLY. So Y, if I'm following directly price, which would mean that I'm looking at a very short term, just a couple days only, then I might be interested in XLY if it breaks above this high over here. XRT, we did have a breakout, but then we have a pocket of supply right immediately where we are right here. So pretty similar. Okay, it would have to break above today's high for me to get interested in XRT. And again, it would only be a couple of days. Why? Because it's price pulling back into a moving average. That's not a moving average turning to revert upwards. And then we said Dow Jones. Similar, but again, an area of resistance right there. And then the last one we said was financials, XLF. Similar, but a little more interesting than the other sectors. I might be willing to nibble at some financial stocks and go for a 1, 2, 3 day trade up until these highs up here. So I might look at some financial stocks, but overall, yesterday we looked at XLB, continued to move higher. Okay, so that was a good sector today. And XLU continue to move higher. Looks great. It looks like it still has potential. Okay, we do have a bit of resistance up here as well. But again, if we're only looking for a few days, and then potentially breaking out, then XLU is looking great. So let's take a look at what happened in our watch list from yesterday. I was trying to get a ideal entry on Ball Corporation. So we can see that Ball Corporation did indeed move higher. Okay, so I didn't get in at the price I wanted to, but I probably should have might raise my price, but I could try again for tomorrow. Okay, so this is looking very good, Ball. So also on our list from yesterday was VST. Okay, VST sideways chop. So all right, Newmont, nice move upwards in Newmont, but right into resistance. So you would want to watch out, potentially exit if you have profit there, and then wait for a breakout. Or you could just hold. If you're okay with the risk that you had in your original trade, then you could wait for a breakout. FCX. Yeah, nice continuation move on FCX. And where's the rest of them? Lin, chop sideways, ECL, a little bit down. I'd be less interested in, actually, no, I'd be okay into that VWAP right there. So, but tomorrow for sure would have to be a green bar for me to stay interested. And then PPG, a little bit of a gap up, but then not really going anywhere. But right above, right at that breakout point, so PPG still looks good. So I'm not going to look for any new opportunities in the materials or utility space. Pretty much all the ones that we had yesterday still look pretty good for tomorrow. So I'm going to hang on to those. So I am going to look for some financials though. Let's see what people are saying over here. Entered Newmont and FCX today. Great. Bitcoin hit an all-time high today. Yes, any thoughts? I already answered that. Options were cheap and it has good delta. I think you're talking about Newmont and FCX. Bitcoin or crypto is moving more like mags now, not crypto. Yeah, as we get more institutional involvement, then yes, that is true. The overall sector will start to move more like other sectors. Took profits on MChip and entered another trade. Okay. What do I think about investing long term in Microsoft over NVIDIA and Apple? That's an interesting question. We can take a look at that. Made some money on coin, got in late. Where am I getting these stocks from? I don't know how long ago that question was, Carla. So I think you're probably talking about these materials and utility stocks that we just went through, the VST, NEM. Those were on the watch list that I created from yesterday's post-market session. No thumbs up. There's no if you guys are enjoying this, if this is helping you, thumbs up would be greatly appreciated. Thanks. How do I feel about the morning payout trade we placed today with regard to the dip at the close? I do like that we bounced a VWAP. Okay, so normally I'm not going to talk about programs in these sessions, but I can comment on the S&P in general. Okay, so today in the S&P, we've got at the end at 12:30 or actually 12:40, we pulled downwards to VWAP and bounced. That's not abnormal. That doesn't concern me one bit because that happens all the time. For example, that's what happened over here on Thursday, July 3rd, right? And then sometimes it doesn't happen that way. It just keeps on going. But see, it happened over here on July 1st as well. Okay. And we often see like a dip. Well, this one actually ended up higher, but important to see dip into the close. So when you've been trending all day long, a dip into the close is very normal. So I'm not concerned about that whatsoever. Okay. Missed this evening's morning payout trade. Oh, well, the great thing about morning payout is it happens almost every day. Okay. Yeah. Okay, let's see. What were we? Financials. We're going to take a look at financials. We also got a question about Microsoft versus Nvidia or Apple. So let's take a look at financial stuff first, and then we will look at that question on Microsoft versus Nvidia and Apple. So we're going to just look at financials. And we've got some strong looking stocks here. Okay. So I'd be more interested if I could see a EMA 8 curling back upwards. So far, all of these are price pulling into EMA 8 and then potentially bouncing, because then I could get more than just a couple day trade out of it. So JP Morgan might be a good example. Not that there's anything wrong with a couple day trade, especially right now that if we're anticipating a pullback, maybe all we want is a couple days trade. But I just want to, I'll look for what I normally would look for first. And then because there's plenty of candidates for a price pulling back into the EMA and bouncing. So far, I only see JP Morgan, maybe American Express. Okay, let's look at those two. Okay. So I like to look slightly longer term on the long-term trend. Okay, so that 50, but EMA 20 would give me the exact same conclusion. And then if I look at this, it's kind of hard to see. It did pull down against the EMA 20 and MA 50. And today there is a very ever slight slope upwards. So now we could call that a match of the longer term trends. Now, if I was a little bit more conservative, then I would wait for that slope to be at least the same slope as my longer term moving averages. Okay. So, but this is good enough if I'm not being super nitpicky, because this green bar is a confirmation bar. It closed above yesterday's open, or definitely closed above yesterday's close, and it closed above the moving average in question. So that is a confirmation. And for me, in the current environment, that's good enough. Right. So I'm happy with JPM. I would definitely consider that for tomorrow, JPM. So that goes on my list. Right. If I was a nighttime trader only, like I can't look or I can't put in orders during the day, I would be comfortable putting in an order on JPM tonight and just see what happens tomorrow. Like if I have a job, I work throughout the day, I can't look at all, and I can't put in any orders or make any decisions during the actual trading session, then I would be comfortable going into JP Morgan tonight. But that's not the boat that I'm in, and that's not the boat that most of you are in. So what I do then is I throw it on my watch list. I see how it opens tomorrow. I see how it trades in the first half hour. And if I like what it's doing, then I will go ahead and get a precise entry. And if you're familiar with day trading techniques or VWAPs, okay, then you would wait for, because a lot of times what happens is the initial move is wrong, right? So chop, 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 upward movement, and then the rest of the day we spent are going downwards on this particular day. And if I look at today, initial move downwards, okay, then we spent the rest of the day going upwards. So I don't want to be head faked in the first hour. So I want to see how it actually trades. And then from there, I will look for a good entry into my position. Okay. So JPM definitely goes on the candidate list. And then I think we said AXP. AXP, same. AXP actually a little bit stronger than JPM because it never pulled back that far. I mean, this is easily a confirmation candle right here. And that, whether I use the EMA 20 or 50 as the longer term trend, doesn't really matter. This did go from matching to going against it and now matching. Okay, so AXP is looking really good also. So I would only pick one, AXP or JP Morgan. If I were to pick right now at this very moment, I've got to look. We are pretty much at resistance right now. We closed at resistance on AXP. And the only resistance that we can see in JPM is the recent high right here. So I'd favor JP Morgan at this moment in time. However, tomorrow morning, if I can watch the first half hour to hour of trading, then I will let the intraday trading determine which one I prefer. So I would only pick one. I'll only go into either JP Morgan or AXP. Okay. All right, let's see what you guys are saying. I'm multitasking. Okay, yeah. All right. Good stuff. Oh, thank you. Thank you, guys. Okay. So the ones I'm writing down now, will you place them as trades in one of your programs? If it fits the theme of the program, yeah. And I like how it's performing in the morning. Absolutely. Yeah. But for example, on my Quantex trades, does it fit one of the algorithms that I look for? And they may not. But just so this is, if I had no tools, like no quants, no computer to crunch anything for me, if I'm just trading with my eyeballs, then these are the picks that I would take. So, and I'm pretty good. I think I can go toe to toe with any of my algorithms. So these are still good picks. But if it fits a theme of an algorithm, or for example, if I can look for gamma pockets with JP Morgan and AXP, I might as well, let's do it. Why not? And this is actually part of a process that I do every night. Actually, I don't just run it on a couple of symbols. I run it on all the symbols in S&P 500, and depending on the environment, I might run it all the ones on the small caps as well, IWM. But that's a couple thousand tickers, and that takes a really long time. So only if I'm in a very risk-on environment will I look at IWM as well. But we can look at a subset right now. So it's JPM and AXP. Might as well throw on the ones that we were watching from yesterday as well. So that would be VST, NEM, FCX, LIN, ECL, BAL, and PPG. And I can kick that off. And on average for my computer that I'm using right now, it's probably 20 to 30 seconds per symbol. So you can imagine if I'm doing 1,000 symbols, I'm waiting for several hours. And even with the S&P 500, I'm waiting for 1 to 2 hours for all of it to finish. And then I can do the rest of the analysis. So, with the small handful of symbols that we just put in, probably just a couple of minutes. So we could take a look at that as well. And then in the meantime, we can take a look at, I lost the chat. Listen to you with Alex Reed and Jack Carter. You mentioned that for you, 3% pullbacks in S&P are the ones you most expect. What do I base that on? That's a good question. So S&P, I think I've answered it over the last few days, but here is a pullback to the recent all-time highs, pull back to the breakout of this high, gap up and run. Okay, so those are two likely areas of pulling back. And then the next level down would be right here. Okay, that's right around 595, which is also very close to that MA50. And then the next level down would be the MA200. For us to break below the MA200, there's got to be some sort of major catalyst. It's got to be more than just a pullback. It's something fundamentally must be changing in the markets. For example, over here, when we went below the MA200, that's because we started to get a whiff of what tariffs might look like. Is that sent us on a downward correction. But barring that, if we're just talking about a normal pullback, these are the levels. And we've got over here, that'd be 2.25%. That would be 3.45%. That would be about 5%. And then the MA200 would be 6.8%. So based on these levels right here, 3 to 5% looks very reasonable. A pullback to the MA50 is very reasonable. A pullback to the EMA20 is very reasonable. A deeper pullback would set us up for even more bullishness in the later half of this year, the second half of this year. But 3 to 5%, simply because that's where the areas of support are in the market right now. Plus, this market has resisted going down with incredible resilience. And it also keeps on shrugging off negative news, consumer confidence, also GDP reports, all sorts of things. It just completely ignores it. So that indicates a lot of strength inside of the market. And so a deeper pullback is probably not in the cards. So here, 3 to 5% is very reasonable in this region right here. Okay. All right. So it looks like we're ready for our gamma. Again, we can see PPG. We've got 120 right here. That seems like a no-brainer. Like probably hit that fairly easily. And that would represent just a $1 move in the stock on an ATR of 2.44. Super easy. Right? So if it's that easy, if it's just a $1 move on a $2.4 ATR, that is not enough profit to be compelling for me to send it out to my Gamma Pocket members. But that could be a quick like 10, 15, 10 to 20%. So there's nothing wrong with the trade. It's just not juicy enough for me to actually give it to members. And then ball looks like we passed this major Gamma Pocket right here. So what we might expect for ball is continued movement to the 60 or a pullback to the 58 before moving to the 60. It depends on what happens with these gamma exposures over here. So ball corp. Let's see where. So we've got 59 as resistance over here. So, and we've got that 60. So we could hit 59. We could get stuck a little bit before we potentially move up to 60. Okay. Ecolabs, we got nice, we call this a gamma wall. So the area all the way from 260 to 290, there's interest in Ecolabs. So there's no reason why we don't expect that this could move up to 280. It just might not go there super fast. It might just kind of like slowly make its way over there. Depends a lot on our expirations. A lot of them are in August. Couple in November, looks like. So this could just be a slow drift upwards, or maybe a little bit more speed into August and then a slow drift upwards. LIN is looking very compelling into 480. That looks great, LIN. Okay, so the LIN could be a potential entry for my Gamma Pocket members. Yeah. And then FCX is looking like a nice Gamma wall into 50. So interest from 45 all the way to 50. And as long as it keeps moving upwards, there's no reason why I can't get sucked faster and faster towards 50. So that was FCX. Okay. And that's such a strong trend right there. So it might not even pull back. So yesterday was a pretty good entry. Like if we wanted to get in today, like we had it on our list to get in today. If we got in today, great. If this thing starts moving with legs, I wouldn't chase into it because it could just easily parabolically hit that 50. And by the time that you got in, your risk reward might not make any sense if this moves too fast. So people a lot of times, well, if you're expecting to go 50, why wouldn't I just jump in at 48 even and just catch those $2? And it's like, yeah, that might be a high. We still have the same probability of hitting that 50, but the problem is if you are on the wrong side of that, if we're wrong about it going directly to 50, then your reward risk ratio doesn't make sense anymore, because at 48, you've got $2 movement upwards, or just say even 49. It's like, hey, and if you're expecting 50, 49 to 50 is still $1 profit. Why not? Well, because then you have a $1 upside. And then if a normal movement would be a pullback to the EMA 8, and the EMA 8 is way down here at 45.5, then you're looking at a $1 movement or a $2 movement if you get it at 48, but a $2.50 movement or $3.50 movement to the downside on a normal move. And again, if we're going to lose money, we want to just be completely wrong about the trade, not be taken out because of a normal move. Okay, so that's why I wouldn't chase into something like FCX at this moment. If you could get an entry basically right where we close right now, it still sort of makes sense, right? So that's $2.8 to the upside and $1.7 to the downside. So you have a better than 1-to-1 reward risk ratio if you could get in right at the close today, at today's closing price. And then NEM, if we have to get above that 60, if we can get above that 60, then there is potential compelling reasons that we could get up to 62.5 and 65, but 60 is very key over here. And we see that on the chart as well. 60 is these highs right here. And I happened to nail 60 on the dot, drawing that line. So we just have to get above that 60 before we have potentially 62.5 and 65. VST got some room to 200. And then AXP, we got beyond the 320. So AXP could be really interesting. So 320 was that resistance that we broke out of right here. And you might notice that yesterday's high was 320.93. Okay, so basically a confirmation bar kept us above that 320 level. So now if we pull back to 320 becomes support, and it just could be a bounce between gamma levels, but 330 is looking very good. And then if we can get past 330, which is this high right here, okay, maybe slightly above that high right there. And then this could be a longer term trade, right? Because we could potentially see interest grow at 340, interest grow at 350. This is what we call a ladder or a reverse ladder. So, but as we break each one, as long as we see interest come in at these strikes and the exposure increasing, then there's a compelling reason to hang on and see if it goes higher and higher, as long as you bought enough time inside of your expirations. So if you're just buying a couple of weeks, then maybe not. Then you would just take your money and run, or you take your profits and run, But if you buy more time, like a couple months or a month and a half, then you have time to wait this out and see if it goes higher and higher. And then JP Morgan, very similar situation, but we would want to get above that 290 and then see that 300. So notice how without my gamma tools, I basically said the same thing. AXP is more compelling to me. It showed a confirmation bar, and I would be interested at the very least until it hit this high right here. That's what I said with AXP, right? And that gamma picture confirmed it. JPM, I said, was less compelling because it's not as good of a confirmation candle. I would rather it moved up a little bit higher until, and then right here, what would this be? This high is 289.7. That's pretty close to 290. So if we can get above that level right there, just call it 289.7 or 290, then that becomes a little bit more compelling all the way up to 296. And over here, we're saying if it can get above 290, then it's interesting all the way up to 300. So not exactly the same numbers, but it's the same general picture. And that's why what I said was, I'm pretty good with my eyeballs, right? I don't necessarily have to have the programs or the algorithms in order to figure out some good trades. But when they line up, right? So at some point in time, you see this being performed long enough, hopefully their skill will rub off and you'll be able to see the same things that I see. Okay. All right, let's see. What time do you watch the market after open to see if it's a fake out? I always watch at least the first half hour, sometimes the first hour. Okay. Would I like Mr. Powell to leave the Fed? It doesn't matter. He's going to leave no matter what. 2026, his term as the Fed chairman is over. He's still at the Fed for a couple more years. But so it doesn't really matter how we feel about it. He's not going to be the chairman anymore, period. So how do I get my hex diagrams? Custom software. I'm working with developers to get you guys access to it. There is a reasonable approximation on bar charts. For example, if you go to JPM, you might see the same thing on their gamma exposure. But I'm working on a whole suite of tools that is a lot more than just what they give you over here. And it integrates everything that I look at. And that way, once I get that going, I'll make it available to people. And then you'll be able to use it the way I use it. Yeah, we have that 290 to 300 right here as well. What, if any, protection do you employ with a potential 3 to 5% pullback? 3 to 5% pullback isn't huge. Okay, so as long as I'm not overexposed, I'm not concerned about that. So that doesn't require a hedge. If I'm wrong about the 3 to 5%, now that's where you would start to hedge. Okay, so I would say, okay, do I hedge a move below the MA50? If I wanted to, if I had a lot of positions on right now, yeah, absolutely. Absolutely, I would. Or a move below the MA200. Right? Those are very similar levels from a hedging perspective. So you could put on, or I could put on a hedge for a move that far down, but that's low probability event. That's the only time where when you hear me say things, okay, well, you want to make money when you're right and then lose money because you're wrong, not because of randomness. And the hedge is the other way around, right? You want to make money, or you want the hedge to protect you when you're wrong. And then if you're right, you want to just get washed out on your hedge. So the way that I would play it if I didn't have a large account or if I didn't have a lot of positions on is either I would just sit mostly in cash, or I would do what I showed you guys yesterday. Let's move into sectors. Let's start focusing on sectors that are not super speculative, that money would want to shift into if there is a mild pullback, like the consumer utilities and the basic materials. What we determined yesterday was that staples was probably not a good sector to go into. So that is how I'm hedging, is going into the appropriate sectors on a 3 to 5% pullback. Now, if we go beyond 5%, if we go below that MA50 or especially that MA200, picking a more defensive sector isn't going to help me, because the more we pull back, the closer that we get to a correction, and beyond a correction, if we go into a bear market, then correlation goes towards 1. I think I talked about this also, or I might have talked about it in a class where, for example, on Liberation Day or on COVID, every single stock on COVID, the day of COVID, the lockdowns were announced, 100% of the S&P 500 lost money. Every single stock in the S&P 500 went down. Bonds went down. Gold went down. Oil went down. Real estate went down. Everything went down. Correlation went to 1. It didn't matter what asset class you were in. And I'm sure Bitcoin did the same thing. So if I look at Bitcoin in 2020, there we go, right there. Bitcoin went down, okay? So when you have the actual huge move downwards, black swan type of events, or events that drive you into bear territory very suddenly, then correlation goes to 100%. So sector rotation isn't going to help you in that case. So, in that case, if it's just 3 to 5%, then I just, okay, overall the trend is bullish. Then we keep on trying to find some bullish plays just in safer sectors. And then if we want to hedge a move beyond that, then we will do an outright hedge, because if it does become a bear run, then only those types of hedges will protect us, because correlation does go to 100%. Yeah. Omar, the Gamma Excel file, that's a work in progress, so I'm not going to explain that. It is going to be built into the tools that I'm making available to everyone, so I'll be happy to explain it once those tools are available to everyone. Gamma pockets are like confirmation to what you see in the charts. Gamma pockets are areas in which the market maker will react. And that may or may not be significant. For sure, there will be market maker activity at those levels, but whether or not that market maker activity is enough to affect the overall direction of the underlying stock is determined by the magnitude and the volume of the market maker's activities relative to the volume that we're seeing in the market that day, or in that week, or whatever time period that we're looking at. So what that means is sometimes, let me open that back. And that's why seeing something like what I showed you on bar chart may or may not be helpful, because we don't have that piece of the context. So if I look at JPM and I look at the gamma exposure over here, I know that the market maker has risk right here, and the market maker has risk right here. What I don't know is if, in order to hedge themselves, that risk is great enough, or that hedging activity is great enough to actually push JP Morgan up or down. Right? And the only way I can know that is their overall exposure versus the what they have to do in order to hedge themselves. So you don't have context over here. I have context in my tools. Here we go, JPM. Okay, because I have a total notional that tells me their exposure levels, 183 million exposure per dollar movement. And then I also have their gamma profile. exposures, a few different ways to take a look at how they may be forced to react and hedge. And then the size and magnitude of that versus the daily volume. Okay, so if I look at JPM, today they transacted 8 million shares. Well, if based on that exposure, that $184 million, okay, how many shares does that translate into? A quick and dirty calculate estimate would just be 184 million divided by the share price. Okay, 63,000 shares. Okay, is 63,000 shares significant in the light of 8 million shares? My answer would be no, not really. Okay, so that's another reason why this may or may not show up as a gamma pocket trade. And so what if they had to transact 1 million shares? If they were 1/8 of the market today, then absolutely they would push the price around. So we have to take it in the greater context. So gamma levels are hidden on the price chart, but they will show up in significant areas of support and resistance in the price chart. What you can't see from the price chart, though, you can guess that there might be a gamma pocket there, but you have no way of knowing the magnitude of that gamma pocket, and or the significance of it in the context of, will the market maker's activity actually push around the stock? Right, so you do need the gamma tools in order to be able to figure that piece of it out. Yeah. Good question. That was a really good question. Can you borrow my eyeball? Sure. You keep on coming, and eventually you'll grow your own eyeball. All right. Bitcoin hit 116,000. Is that? Yeah, I did surpass that for a little bit today. At the moment, it's just a hair under. Yeah. Okay. So I did not answer the Microsoft NVIDIA thing. I am at 1 hour, at the 1 hour mark. Let's just do it super fast. Okay. Microsoft, you can see very compelling, very strong gap up movement. This is much stronger than S&P 500. Very, very, very strong relative strength. NVIDIA, same thing, except NVIDIA is at all-time highs, but it only just barely broke above it a couple of weeks ago, pulled back, tested movement higher. That is looking very good. And then if we look at Apple, Apple is not even close. Okay. So if I was going to look at Microsoft, NVIDIA, Apple, this automatically disqualifies Apple. And then if we're looking at a longer term prospect, say, hey, I'm looking at 6 months, a year, 2 years, 5 years, whatever, same thing. Below the MA200 is the number one thing in that longer context. And until Apple gets above there, it's not even a contender in the race. So Microsoft, well above the MA200, nice turning upwards of that MA200. And then the NVIDIA, same thing. And what I will start to look for is stacked moving averages. So in the way that I set up my charts, I set it up in the order of the colors of the rainbow. So red being the longest, and then purple or violet being the shortest. Okay, so red, orange, yellow, green, blue, purple. Red, orange, yellow, green, blue, purple. You see all of this. This is a perfect stack right here. Perfect stack. And what did that translate into? It translated into this really long bull trend right here. I don't quite have that perfect stack yet, but we're getting pretty close. We're getting pretty close over here. And then Microsoft, same thing. We're actually closer on Microsoft than we are. Actually, we might have it after today. Red, orange, yellow. Yeah, today we just got that perfect stack. So longer term, Microsoft is looking really, really, really good. NVIDIA looks almost as good. So which would I choose between the two? Well, I would say that one's success translates into the success of the other, and the other's success may or may not translate into the other's success. So Microsoft, as it succeeds, as it grows and expands, will it need more and more chips? And will those chips necessarily be from NVIDIA? For the foreseeable future, it does seem like NVIDIA has a huge lead on other chip designers and chip providers. So the answer for now, as far as we can tell and as far as we can see, is yes, Microsoft will keep on purchasing from NVIDIA in order to maintain its growth and performance. Whereas NVIDIA, it could, if Microsoft stops buying chips from it, it's probably just going to be somewhat of a blip in their growth. So from that perspective, NVIDIA is a little bit stronger, but both of them look excellent in terms of a longer term trade at the moment. Yeah. So I'd be very happy with either one of those two. Okay. All right. I hope that was helpful for you guys. And, hit that like button if it was helpful, if you want to see more of this. And I will see you guys tomorrow. Yep. All right. Thanks, guys. And have a great rest of your day.